Hi everyone, it's Stu here again. It's the first day of the new trading week. It's the final day of the March, the trading month of March. It's obviously the final day of the quarter as well. Lots of positions were wrapped up on Friday. Stock markets collapsed on Friday in the United States into close in particular. We'll have a look at that in a minute. And gold continued to rally, new all-time highs on Friday, new all-time highs on Thursday, Wednesday, last week, and again this morning we've hit 3128 this morning. Hope you can see the gold chart there, 3128. If I just make this a wee bit bigger, I've figured out how to do this. Oops, too much. There we are. I hope that's made it a wee. Oh, it hasn't actually made the chart any bigger, has it? So there we are. That's gold. So if I minimize myself, you don't want to see my big ugly mug, do you? Let's get me down there. There we are. So you can't actually see that now, can you? Because I've got that on there. But, let's just move it back down a bit then. That didn't work very cleverly. There we are. You won't be able to see that properly now. Can you see that? Just about. We move down. So all-time highs this morning, 3128 on the gold market. So we are. I'll just bring this back up. There we are. You can see that now, can't you? I'll now move that over a bit. Not too far, this will disappear. There we are, 3128. So a very, very strong week last week for gold. It's been a strong month and a strong quarter. More on that in a little while. This is the weekly chart. You can see this is 1, 2, 3, 4, 5 consecutive weeks to the upside. If we look at the daily chart for last week, another strong, as I say, strong close to the week, Thursday, Friday, from this sort of plateau down here, relative plateau, sort of 3-day sort of retrace, and then off we went again. Obviously, things are driven by the uncertainty that's still swirling around. A big worry this week, as far as markets are concerned, is the uncertainty around Trump's tariffs and how all that's going to pan out or not pan out. All sorts of chatter, both positive and negative. Reciprocal tariffs coming in on Wednesday, on the 2nd. And he said over the weekend every country will be included. There was chatter in the UK press over the weekend that Keir Starmer, the Prime Minister, had spoken to Trump over the weekend, and they were coming to some sort of potential US trade deal, potentially, which the UK might have done quite well out of, blah, blah, blah. Lots of chatter in the European press over the weekend about mega, not MAGA, but mega, make Europe great again. So certainly, he's certainly put the cat amongst the pigeons since the 20th of January and his inauguration day. But markets really have gone all in one direction. Gold's continues to rally. The dollar's really gone sideways and cooled away somewhat. And stocks have rolled over and moved down. But I say more on that when we review the whole month and quarter in a little while. It's a beautiful day here in sunny London today. We've got blue skies out there. I've got my proptrade.com t-shirt on. And we're all good to go. Today, we're also going to, I'm going to spin the wheel later on. Let me just show you. Here we are. I'm going to spin the wheel for 10 of you to win accounts with us. So I'll do that at the end of today's session. So do hang around for that. I'll try not to be on for too long. And so those of you that are just here to get the free account, I understand. But I'll say I'll do that shortly after we've had a look at the markets. So today it's continuation of Friday. So beat here. We'll just have a look at gold on the hourly chart. So strong rally on Friday here into close. This was that was the open this morning actually. So a strong move on Friday, higher, strong open this morning. We hit the new all-time high on the European Open this morning. This 3128, and we're currently seeing some profit taking, which is somewhat inevitable as the US stock markets are opening as well. The US stock markets, cash markets, are just opening as I'm speaking. And I'll guess if I just have a quick look at my feed here. Yeah, we were down on the open. 10-year yields, interestingly, under 4.2. 419.76. That's quite a significant decline for the 10-year yield. But stocks are opening in the red in the US today. So let's just start from the top. If we go through everything, we've got data in about 45, so in about 10 minutes time. We've got the Chicago PMIs. Remember, the PMIs are important because they're forward-looking, and the Chicago ones are key because it's a key services area, big financial services. Obviously, the futures exchange are all based around traditionally in Chicago. So we'll have a look at that when that rolls off the press in about 10 minutes time. Crypto, it's had a week weekend, if you like. We were moving, if we've got the daily time frame, we were moving down, having rallied a tad here on the 24th. We talked about this last week, didn't we? And then on Friday, as everything was selling off, crypto got caught up in it as well, and we were down very significantly on Friday, having perked above the 20-day moving average at the beginning of the week on Monday. That actually happened to be our not our all-time high, our recent high in this rally that we've seen above this trend line and above this trend line here. The blue dotted line, and we were looking quite good, and then we went sideways really Tuesday, Wednesday, Thursday, and then down significantly as everything collapsed. So we were back under the 20. So that rally has been a false breakout. We were down again, and we were down again over the weekend, and we're down again this morning. We're at 82,000. So that then brings in our downside revision back to 78,000 and 76,500. Which was the intraday spike that we had here right at the beginning, at the first week of March. So downside target now back to 78,000 for Bitcoin. If we breach this 80,000 level here, you can see that how key that has been in the past. Sorry, I'm going to zoom that up. You can see this level through here. I'll get rid of that. Get rid of that. I don't want the old panel. Hopefully you can see. Can you see that? I can't see what you're seeing. Actually, hang on. Yeah, you can see that, can't you? So this is this level here, this 82,000 level, proved a bit of support area here during March. So a breach of here, and there's a lot of fresh air that will take us down to 78 and possibly 76 as well to the downside. Is that low enough for the bulls to start buying again? Who knows? But so the first breach of the 20-day moving average lasted 3 days before the panic on Friday. End of the week, end of the month, end of the quarter, all of that's into play as well. So no particular surprise there. Sorry, I'm getting notifications on my WhatsApp feed about something completely different. But yeah, so crypto down. Let's just if we look at the weekly state of play for the month and the year. So our all-time high was obviously on the 20th, the euphoria around Trump and the Trump trade and deregulation and tax cuts, and big crypto fan that obviously had his own coins. Melina, the wife, had her own coin as well. Melania, sorry, not Melina. Melania has got her own coin as well, or had her own coin. It still exists, but anyway, all of that enthusiasm has cooled quite significantly. And as you can see where we are now at this 80,000 level, it's a key level here as we were moving up on the week of the election. So this is the week of the 4th of November. And we were rallying quite strongly to this all-time high at 109,000. That's cooled now to the end of the first quarter. Where we go from here is anybody's guess in a sense, but as you can see here, this 76,000 also coincides with the 50-period moving average on the weekly time frame, and we, for the last 5 weeks, we have been under the 20 period moving average as well. So for technicians, for Bitcoin to move higher, it needs to break 87,500. This 20 period moving average, which is where the 20-week moving average sits, and for it to move much lower, it needs to break the low we've posted in March at the 50 period moving average on the weekly time frame here at around about 76,000 to the downside. So they're the two levels down and up for Bitcoin as we move into the second quarter. So let's just where are we? We still got 4 minutes. Let's just show you the calendar. We'll come back to everything else. That was crypto done. Sorry, I should have said it at the top of the shop. Those of you celebrating Eid Mubarak, happy Eid Mubarak to you all my Muslim friends. I hope you're having a great have a great week. Obviously, today's the main day. I haven't actually seen the new moon here in London overnight last night, but our clocks move forward. We're into springtime here and summertime here in London. It always feels a wee bit better. So if you are watching, have a great week, my friends. PMI week, as it's the first week of the new month, and we kicked off with better than expected numbers out of China this morning. Not greatly better, but better than expected. It was green rather than red, which is always nice to see, isn't it? Inflation was the other key number out of Germany this morning. All the federal states have reported. Remember, they all report separately. That's all come in as expected, 2.2%, a tick lower than last for the first reading in February, and the monthly is coming at 0.3 of 1%, also a tick lower than the reading for February. It's the P for the first reading, always the most influential. Really, dollar's a bit mixed today. Euro was up, sterling was up, but it was dollar was up against the weaker currencies like the Kiwi, which we were still short on from last week, and the Australian dollar as well. So Chicago PMIs in a minute, 45.5. We'll see what that number looks like. We'll just wait till that ticks over because it doesn't update this automatically. But that's the main key data of the day. If we just flick to, I just flick to the euros. So euros 108 today. Go to the. Let's just reset that. There we are. We were higher this morning. We've rolled over since Europe woke up and started trading. So we pitched a high of 108.50 this morning, and we've been low since. And we're having gone long here on Friday afternoon into 108.50 for the high this morning in the European open trades. We've been down and under the 20-hour moving average here since 10 o'clock candle, and we're down in the previous hour, sort of bouncing off the test into the 108 area on an intraday basis. So euro down at a little bit, but overall, down overall. The trend remains. That's what day is gone. Daily, not 3 hour time frame. So we went last week. Oh, it's raining bad. Sorry. As we said last week, into the 20-day moving average, and we bounced off that on Thursday. Friday, we were up back over 108, and we're back into test 108. So again, this is a false break of the 108 area, but at the moment we're just sort of pivoting through 108. I'm not sure the Chicago PMI data will move that much. Let me just refresh the calendar. What's taking everything with us? The whole. There we are. The whole. All the federal states. It's got everything on there. I thought I'd filtered that out, but not for some reason it hasn't updated. It's a bit late here. Let me just check the Forex factory calendar. Might just be late. No, 47.6. So it's coming better than expected. 47.6. That's quite a significant beat. That 2.1 of 45.5. That's quite a significant lift for Chicago PMIs. But if we look at the forecast, you see we remain obviously 46, 45, 47.6. Sorry, remains in contraction zone. We remain under 50. Anything above 50 is expansion. and this sector was last in expansion, as you can see here, back in August 2022, is the summer of 2022. Since then, Chicago PMIs have been negative. We've been as low as 35, 36. We're back to 47. It's improving, and it's improved over the last, certainly over the of the data for 2025, but the low was October, December here, where we went to 34, 35, something, wasn't it? No, it's actually lower here, wasn't it? But it's been improving, but we're still in negative territory. It's better than expected at 47.6. So perhaps next month we might scrape into the positives. We shall see, but that's good. That's better than expected, and that should have lifted the dollar a tad here. If we look at the people, I don't know if anybody's trading this on the news, but it's dollar, euro down a tad here on the data, as you might expect on the 5-minute time. But we've been looping lower all day, haven't we? So we're in line with the trend for the days. You see on the 5-minute chart as the lows have got lower, and our low for the day so far is 108.01. So not quite into the key 108 area. Obviously buyers down here as we've looped lower, so we're going to test 108 again. That data is pretty positive. We'll see. We're at 108.10 at the moment, so still 10 pips above the key 108 level. So we're a bit lower on that data as that data comes across. So so let's just have a so we're going to review the March and the quarter. So let's just have a look at the general trend of what's been going on. So if we take this up to the daily time frame, and for the euro, so you can see here. So this is so for March, we topped here. It's looking pretty strong, wasn't it? Here at the beginning of the month, we went up to 109.50, or the exceptionalism about the German spend. Capital spend, the defence ramp up, the rearmament of Europe, so make Europe great again. It was a vernacular I read over the weekend. I don't know who's coined that, but maybe I have a wry grin over that. But so anyway, euro, the German elections lifted the euro against the dollar here to 109.50 zone. We couldn't hold it. And this third half of this final third of March, we've declined into the 20-day moving average, which has provided support, and then euros bounced off it. So it remains okay. We've had a nice run up from the lows at the beginning of March, but we're back here. So we go back to the beginning of the year. We were all the way down here, weren't we? 102, 103. People were talking about going to parity, i.e. €1 for $1, $1 for €1. That didn't happen. We had a sideways action June, January, and February, and then the German elections has really rallied the euro and kicked German elections on top of Trump's tariffs, threatening significant tariffs, particularly Europe. As well, very much in the crosshairs, has galvanized the European leaders, and so it's galvanized the euro itself as well. So we're up quite strongly. Obviously, that could all flip again in the next quarter. Everything could change again. These tariffs could not be as bad or not as good as, depending on what side of the argument you're on, and we could move. But as technical traders, as a trend following trader, I just follow what the system is telling me. So we were short for most of the final quarter of 2024, bit directionless as we kicked off the year. We really needed to break the 105 area, big, hugely psychological area that was broken very significantly on the German elections, and we've rallied, and we're currently holding basically the 108 level. So 108 is our support going in to April, and the resistance sits another 100 points higher, 100 whole number higher at 109. So that's our range as we go into April and the second quarter. Technically, again, the actual 21 EMA is here at 107.70, and the 50 is coming up to the key 106 level. So that becomes a player as we go into the second quarter. 106 is key, and obviously then 107 is above that. But the first immediate support, 107.70 and 106. They're the two big lines of support for euro dollar going into the new month and the new quarter. The resistance is initially at 109, and the end of day highs we had at 109.50. So 109 and 109.50 are the upside targets for euro, I say, going into the new month. Just the other technical indicators are actually on this particular chart. You can see RSI is fairly benign, really. It's positive, but 55 it's sort of benign and sort of sideways, having had a bit of a shakeout. So you might want to look at a sort of some fib levels on this particular decline here going forward, and you'll see. I'm sure you. I'll put a little as an example. I'm not saying this is where's our fib level? So 61. Oops. Our 61 level comes around, is that 60, is that 50? No, our 61 sits smack on the 109 level. So that makes that 109 level, we just pointing out eyeballing, even more significant. So the 61 fib level of that last leg down, excuse me, you can see that sits at 109 for the euro going into the new month. As I said, MACD remains negative. The momentum's cooled as we've gone down and then bounced up to 20. So that 20 is key as we go forward, and it'll be much the same for the other crosses. The yen, on the other hand, say unsurprisingly, we got a weaker yen into the end of March. That's quite common given. It's the end of the Japanese financial year at the end of March as well. Lots of yen gets repatriated back to Japan for that balancing up exercise. But again, you can see the 20-day moving averages become a key over the last week or so as the yen has weakened and dollars rallied into the significant. Well, this is 152. This is the 150 level that we breached. Late the week before last, and held it all of last week before the shakeout of the dollar on Friday, and we were back into the 20-day moving average, and a big spike down here on the final trading day. Remember, the Japanese markets are closed now, but obviously Forex trades 24 hours a day. But for balancing points, we went into this 48.76 level, this level of previous support area here today, but then we've bounced back off it and we're back to the 20-day. So overall, this remains a wee bit bid. We'll see where we go forward going into April for dollar yen. So the 20-day sits just shy of the key 150 level for dollar yen. The 50-day is coming down to meet it by the looks of things here at 151. 20, you see here 151. Just over 151 at 151.15. So 151 and 150 is the 100 pip channel going forward for yen. But as you can see, we've had a move up and then a move down, counteracting it. But again, a lot of that is technical, given the flows of yen at this time of the year. RSI still remains sort of bid to the upside. MACD still remains bid to the upside. So we could have a turnaround unless we start to move down. So support is that 148.50 level which we've already tested today, the final day of the year, of the quarter, I should say. And resistance is the 50-day moving average at 151.20, so 151 the round number to the upside. And the pivot area, the big significant pivot area, is the 150 itself area for dollar yen going forward. As I say, it's sort of cooled significantly on Friday, having moving up quite nicely. You can see here before Friday we were looking quite perky. It looked like we were going to have a go at the 50-day moving average. It never happened, so that's why that remains the big resistance area for dollar yen. So dollar relatively okay against the weaker yen, but we could have a turnaround as we move into the second quarter. Sterling, on the other hand, has had a go at 130 this side of there's 130 here. This side of 2025. So it's had a good March. We rallied into. Let me get rid of that. We rallied into 130 at the end of March, and say we if we go back to the beginning of the year again, we were a bit mixed for sterling. First, we went lower into 121.50, and again we were looking for 120, and it was down. We had a quite strong turnaround in that second half of January and February, but we couldn't break. Although we broke the 20-day, we were very choppy around until we had this big break here in the middle of February, and since then we haven't looked back. Sterling has strengthened against the weakening dollar, so we've gone from this zone of around 126, the break of sorry, not 126, 125, hugely psychological area. You can see the resistance here, this big yellow line here. You can see that. To the upside, and then we've rallied from 125 all the way to 130. So we're consolidating as highs, sterling cable. So again, we remain a bit like the euro, supported by the 20-day moving average. So we've got this. Trump's got this weaker dollar that he sort of wanted, although he still talks about the strong dollar. Obviously, from his trade tariff point of view, the weaker dollar is better for their exports, but we can see the support of the 20-day moving average is fixed. 50 days all the way down there at 126. So again, technically moving forward, obviously you can see there, well, hopefully you can see there, clearly a break of 130 would be significant, but if we look to the left again, you can see how significant that is. Breaking under it took a while before it collapsed here back in October time. So 2 weeks before we broke away from the 130 area. So first attack of the 130s was here on the 17th of March. We've cooled down. We cooled back into the 20-day moving average. So it's sort of similar sort of period to here. So is it going to hold? Looks like it is at the moment, but we shall see as we move into the new month and quarter. But that remains bid on an end of day basis because the 20-day moving average is held really strongly from the test into it last week. Bounced on Thursday, down a tad on Friday, and we're sort of sideways here so far today. So sterling also bid against the dollar to the upside, support 128.80. The 50-day is there at 126.80, and the big resistance is the 130. A breach of 130, as you can see, could take us nicely higher, and all the way to test the 135 area, which we were last at the end of September. You see there's a lot of fresh air. When I say fresh air, there's the big resistance you can see through here. And the last time we went up it, resisting it, up at it, and then it collapsed into it, but we stayed there. So there's a lot of like fresh air above this big yellow line at 130 for cable to the upside. Okay, I'll look at the others quickly as well. Dollar CAD's the next important one, but again, we've been saying this all month, and we were really in a bit of a sideways action against the loonie, the dollar, the US dollar. Obviously, all very much in focus with regard to tariffs, 51st state talk, fighting talk from Carney and many other Canadian politicians. And it's getting a bit brutal. The weekend, Carney said, our relationship with the United States has changed significantly. On the flip side of that, Trump was asked last night on his way back from Mar-a-Lago to Washington about how serious was he about trying to, he didn't say change the constitution, but a third term. He keeps saying, oh, people, my fans want me to take a third term. It would need a change of the constitution, but that's more action of autocrats and dictators, isn't it? Changing the constitution so you stay president. But anyway, let's not get dragged into that again, Stuart, shall we? Technically, dollar CAD sideways action. Our high has been round about the 144 level. Here, obviously, the initial talk of tariffs and against the Canadians took us to the 148 level here on the beginning of February, but we remain sort of consolidating at high. So dollar is up against the weaker loonie. The uncertainty about the political situation kind of sort of gone away a wee bit, with Carney taking over from Trudeau resigning. But we've got elections at the end of the month, 28th of April. We've got elections still looking like the Conservatives may take that, but their leader's been cut somewhat, and Carney's eaten into that quite significantly. So he's fighting for his future as Prime Minister, Carney. So all on that to play. But again, sideways, not trending. We got a flat 50-day. We got a flat 20-day moving average. You see that? Just not going anywhere. So you just look sideways. So that's 145 area, big round number, 145, 148.50. Sorry, 144.80 is the high we got on an end of day basis for March. So 145 remains a big line in the sand. The support level is really through this this yellow line here, which takes us to the 142 level here for Luna, and we could get down to there quite quickly. 140s all the way down here. So we are still consolidating at highs. Aussie remains under pressure, and the Kiwi remains very much under pressure. So this is again daily time frame of the Kiwi. Aussie again sideways action for the commodity currencies. Commodities, very strong. Typified everybody's favorite gold, but others are very strong as well. Copper and others. So the top we had is took us to .64 here at the end of February, and the floor is where we were approaching again, 6.62, and we're down again today. So dollar up against the Australian. Same with the Kiwi. The Kiwi on end of day base, a bit stronger in towards the beginning of March. It took us to over .58, and we're back to .5660, our first target from last week's short trade on that. Well, last week or was it? Yeah, last Monday we actually went short. Then it went nowhere for most of the week, and then Friday finally we went down. I need to close it out on Friday night, but I thought. Again, it's psychology. We've been going absolutely nowhere all week. I'm going to zoom that up. Zoom it up. So we were short here on Monday night, and we were nowhere on Tuesday, nowhere on Wednesday. We were out the money quite a lot here on Wednesday. Same on Thursday, and we'd actually closed. It actually closed a positive day on Thursday. You can't really see that very well, can you? But, Friday was down, and I nearly closed it out on during the day on Friday and at close. But I thought, well, it's been out of the money all week for 4 days. It triggered short on Monday. Let's just leave it and see what happens. And it's actually hit target, and so 50% of that position is closed at the moment. And I'll pull the stop loss. In fact, I'll pull the stop loss down now whilst I've got you here at entry, so we can't lose on that second 50% either. So the stop loss on that Kiwi trade from last Monday is now at entry, and I might pull it down even further as it's breached the 50-day moving average, but obviously it could bounce back quite quickly as well. But anyway, we'll have a look at that in more detail later. So the big story remains that the dollar's up against the Aussie, the Canadian dollar, and here you can see against the Kiwi it's down. Next low really is this zone down here, which takes us to .56 for the Kiwi to the downside. So we'll see how if that continues to move to the downside. What time is it? It's 3:05. I've been talking for nearly 50 minutes. Right, so that's let me shoot through the others a bit more quickly. That's the major forexes. Again, guys, if you've got a particular asset you want to have a look at, there's nobody. Got the chat box open. Somebody's actually asked for something. Gopi said hi there. Hi, Gopi. I will do the spin in a minute when I've been through all the assets and our open trades at the moment. Okay, so just bear with me. It's 3:05. I will stop talking in 10 minutes. I promise. Okay. So I'll do it at 3:15. And we'll have a quick look at. So we were just doing a review, I say, of the month and the quarter. So dollar remains up against the Kiwi, the Canadian, and the Aussie, and down against the sterling. It's up against the yen, but that could go either way. But the yen and the euro, sorry, sterling and yen, sterling and euro are outperforming the others. So. I don't know what markets plan. So that's the main forex pairs. We've had a look at Bitcoin, didn't we, earlier? Energies quickly. Oil has been really all over the place. We'll stick with the US oil. So here we were in January, all the way up here at $80 a barrel. We'd had a strong end of 2024. We topped here, as I say, right at the middle of January, and since then it's been a big decline. So from $80 a barrel, we went all the way down to test 65.50 during March. We went to 65.50 on the 5th of March, and then again here on the 11th of March before we recovered in again the final third of March relatively strongly as we went back over the 20-day moving average. The first break here on the 20th was quite weak, but we rallied, and we rallied into the 50-day moving average again as well. Obviously, oil is a particularly geopolitically sensitive asset. It's obviously sensitive to global supply and demand. The swirl of tariffs, talk of recession in the United States, talk of even global recession on the back of what Trump may or may not do, rising inflation, lower growth, all that story has an impact on oil, which is why we declined into this 75 below $68 level here. This was our pivot area here, 67 it was, wasn't it? Not 68, sorry. And rallied, but we've rallied in this second final week of March, final third as well, from the floor that we found this nice consolidation at 667. And currently today, to end the month and the quarter, we are actually higher and testing the 50-day moving average. But as you can see, the 50-day moving average has always provided quite strong support or resistance initially, so down and then up and then up and down again. So are we going to do the same thing here, run into it and then push back down to the 67 level, or are we going to hold the $70 a barrel level and push back higher into the $75 a level? At the moment, it's difficult to make a call on that, although we are now we've been over the 20-day moving average for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We ran to the 50-day on Friday. We're up again today, so again, see where we go for March. So as we go into April, if we can hold the $70 level, which it's difficult to make that call because it's only today that we're back over it, we could start to move up, but we need to break 72 and 72 is all the way up here actually, $72 to take us higher, but that's quite a leap above the 50-day moving average to take us to 75. So it's still aired, I would argue, potentially to the downside, but we do need to break $69 significantly, which is where the 20-day moving average sits. So $69 is the major, the short-term support as we go into April for US oil, and $70 is really the resistance area. And then higher above that is just at 70, 50, where the 50 days. I can't really make that call given that today isn't over, but the RSI remains relatively well bid, and MACD also remains relatively well bid. So close above this 50-day moving average today will be received as positive, both technically and from the fundamentalists as well. You can see that that blue dotted line there at 71, which is a support as we were coming down here in February. So 71 next in the immediate line in the sand if we can hold $70 today going into the end of the month. We'd looked at gold, huge rally, and we'll look at the gold in a bit more detail in a minute, but dollar indexes remain very much in focus as well, and we are down again today. We'll just start with the Dow in the United States. All-time high was it wasn't actually in February, was it? The all-time high for the Dow was it February as well? I don't know. We got double top, didn't we? In from December and January for the Dow. That was diverged from the other two a tad. So 45,000 was the all-time high. We shook out quite aggressively for the Dow during December, but then we gobbled it all back by the end of January, and then since then. There's the euphoria of the election. Since then, we've had a very weak February when we went all the way down here by the middle of March to 40,500 on the Dow. Looked like we were going again back over the 20-day moving average. And I know we were long here, 24th, but our last trade on this was a short on Thursday. Obviously, we were very lucky on Friday. Unbeknown to me or anybody, really, big down day on Friday. Big shakeout. We lost, the Dow lost 1.79%. The S&P lost 2.09%, and the Nasdaq, as ever, the most volatile, 2.8% on close on Friday. So big down day, as you can see here, is amply demonstrated by the Dow here. Biggest down day for a long time here on the Dow. You know, it's suggesting that there's more weakness to come. Having again perked over the 20-day moving average last week on Monday. Looked this time last week it was looking quite positive, wasn't it? We were back over the 20-day. We stalled a bit on Tuesday, give it back a bit on Wednesday. It was still okay. Thursday it was still okay. But you know, the panic about the tariffs or not tariffs or whatever is going to come in. Markets hate uncertainty, and that unfortunately is what President Trump is creating and generating in the markets. This flip-flopping of tariffs or no tariffs is the rhetoric, the words he's using or not using, the words his people are using, and just markets up. Come on, let's find a flaw. So. Friday shakeout, bit of this one is currently up today, but I know it's down overall. So the technically again end of day basis 40,868. The intraday low has took us to 40,689 here in the middle of the month. And if we look to the sideways, we were last down here on the markets. Were last down here. This takes us back to September, I think. Yeah, September the 12th. So 6 month plus low for US stock markets. We are also in contraction zone. Contraction is 10% decline from all-time highs, and the Dow's in that. And all the other two are also in contraction zone as well. Some of the big players. I've just got the S&P 500. You see, technically, it's down. Interesting is the MACD here is looking, is it going to go low again? This chop, but the trend remains to the downside. People are sort of trying to buy the bottom or catch the bottom. The Dow, obviously, because there's only 30 constituent members of the Dow, it can be a bit more volatile, even though it's industrials that should have been benefiting from the sort of remanufacturing or the repatriation of jobs into the US more so than perhaps some of the services sector. But anyway, I said I was going to do the spin down at 1:15, and I've only got a minute to go. But the Dow short, we're still short on that from whenever it was, Thursday night, wasn't it? Nice big short. Our entry was our target was hit. We've hit our second zone here as well on Friday, but again I kept that open and it's down, and it's actually bounced back in the last few hours. But we're still short. My stop loss is here now. We'll review that later on. But some big points made on the Dow, and percentage-wise, some big percentages made as well. That's where our stop loss sits now, 41,800. Quickly, because I said I'd do this at 1:15. S&P the same. There's that low from the 3rd of September. We've been even lower in the last hour or so. We went to, where is it? Oh, interestingly, the S&P 500 has tested 5,500. So this is very much in contraction zone, 10% down from the all-time high here. Sorry, it was February. That's the hourly chart. Sorry, 19th of February here. Our all-time high for the S&P 500, new all-time high. But what a vicious sell-off! And always happens. Markets sell off much more aggressively than they rally up. The trend remains very much. I had to remain very much to the downside, but a big break of the 20-day moving average here on the 21st of February, just a few days after the all-time high on the 19th, all the way down into this 5,533 level again today, and then into 5,500 itself on an intraday basis, which again takes us back to this September the 11th, 2024 area before we rallied into the year end and then into February. So big leg down, retraced here to the just a couple of days ago, wasn't it? Again, another one that was looking quite positive on Monday. Tuesday we were higher again, but we sold off on Wednesday, consolidated Thursday, and then that huge big sell-off, 2.09% on Friday, and again a huge candle to the downside. We're still short on that. And finally, Nasdaq, even more exaggerated. There's the all-time high here again. It's up the daily, yeah, here at 19th of February, and again similar pattern, and a big move down. Although the Nasdaq has clobbered the Magnificent Seven that's driven this market to these all-time highs in December and February, has sold off really aggressively. Obviously, you're rolling Tesla into that as well. Obviously, it's part of the one under $250 on Friday. Musk's political maneuverings have come into focus, and it's brought the stock, that particular stock, under pressure. Obviously, over the weekend, I don't know if you saw, but he sold Twitter, or X, to his AI model for $33 billion. He bought it for $45 billion with taking debt into consideration, but to focus on that position as well. So a big move down for US tech stocks as well. And just finally, we're on tech stocks. I'm just going to finish with the DAX. The DAX has had a really strong run, and again, all-time highs here, 18th of March, on the rearmament story. Some German stocks have done really well, but again, they can't throw against the wider trend, and it's been down last week, and it's down again today quite significantly, and testing that 22,000 level once again today, and under its 50-day moving average for the first time in a while. So stocks have shaken out, having had a really good first quarter. Shaken out. Where's the floor? Well, don't try and catch a falling knife, guys, and see if we can find a floor. As far as the Dow's concerned, the momentum, having gone under the 50-day moving average, may take it under this 22. Sorry, the DAX may take us under this 22,000 level as well. But watch that as we go forward. Right, those of you that are waiting for that, I'll stop talking and we'll have a look at. Actually, let me just finish with gold. I'm saying I'll stop talking. We touched gold quite briefly at the beginning. 31,000. Sorry, no, as we said at the beginning, 31,228. So $3,128, a new all-time high today. If we look at the weekly chart for gold, it remains bid. It's the fundamentals to do with holdings and bank holdings of gold and country holdings of gold have helped this rally. It's not just the geopolitical uncertainty and the weakening dollar and bonds yields diminishing as well. There's some significant legal rules that have lifted the dollar during this very significant rally. But again, is moving higher. We went long on this on a daily basis, but we'll come back to that in a minute. So yeah, we've moved from 26.36 here. If we go back to the beginning of the year, where's November, September? Beginning of the year was here, around about 26, just over 2,600. We've gone all the way to 3,100. So it's a huge 20%, near 20% rally. I think on a yearly basis, it's up like 18.6% gold for 2025. Can it hold? Well, the trend is very much to the upside. This is the weekly, remember, the 20-week moving average all the way down there at 2,800 and 34. So gold remains bid. It will need some significant clarification on the uncertainty that's swirling around, but we could collapse quite significantly. But 3,000 level is the next big support area. Our last trade on gold was a long position here on Thursday, strong interclose on Friday, and again, so again another one. Our stop loss is here. I think that's probably high enough at the moment. It's not a stop loss, 27th, yeah, from our entry on Thursday. So we might drag that up, but again, very much in the money on the gold position at the moment. So enough chat. I don't know how many of you are still here. Gopi, I hope you're still here, but let's Let's bring in the spinning over here and see how we go. Right, I'm going to make a physical check of these. Okay, and see how we go. So click to spin, Stu. So let's have a click. Your names on here, but I'm looking for 10. First one up is stylish. 5 8. No, it's scenes 44742 signs. I'm physically making a note of that. Okay, so close. So let's spin it again. Congratulations, signs. Or is it signs or scenes? Scenes 142. Liquidity 001. Is that liquidity double? Yeah, liquidity 001. Liquidity. I can hear. Can you hear? I can hear applause in my ear. So let's close. Let's spin again. I should I have taken you off? I probably should have taken you off. But anyway, if you win again, I'll have to. We'll take you off. So P and what's that say? P Panda 254. Panda 254. That's 3. That's 3. 7 more to go. Congratulations, Panda. Best of luck. These are $5,000 accounts on with our regards. Raid FX Trad, that is. Yeah, Raid FX Trad is number 4. Raid FX Trader or Trad. She says Trad, doesn't it? So we close that. Next one up. So we're halfway through. Still 5 more to go after this one. Gold, no, Samuel Anoki. Samuel, congratulations, Samuel. It's the first one with the correct names. Anoki. Samuel Anoki, 56. Is that your age, Samuel? Or when you were born? Or who knows? It might be. Close. Next one. Some great names on here, isn't there? Some great handles. 5 more to do. Number 6. Winner number 6 of the $5,000 account is C0013 at C0013N13N. That's a interesting handle. So we close this. Winner number 7 is going to be traded by the handle that goes by the handle of Fizzy Richards. No, isn't it? It's Jarl Long. No, isn't it? It's AJI PAM 019. AJI PAM 019. Next one. 3 more to go. Winner number 8 of the $5,000 theproptrade.com account is Devine Brain. Who's it come up? It's come up with Devindra. Sorry, Devindra. 97. Again. Is that your age? Or when you were born, Devindra. Good luck. Congratulations. Well done, everyone. 2 more. Final penultimate winner is Mr. Miss, or however vernacular you want to be called. It's coming in with Mr. Mohammed. No, it's not. Saeed, or is it Ahmed? Saeed Siddiqui, 85. Saeed, congratulations, Saeed. Hope you're well. Remember to look after these accounts. Always manage your risk, my friends. Siddiqui, 85. And finally, the final winner of today's and our latest giveaway live is. Good luck, everyone. If you're not on the winning list, it's going to come round. Number 10, the final winner. Let me just check. I've got 10. Cool Dreams 24, or is it? No, it's not. It's Cool Dreams. I'm sorry. It was very close. Dr. Alexandra. Dr. Alec. Let me just make a note of that. Sandra. We've got all these officially, obviously, properly. I'm just scribbling them down just for my benefit. So let me just count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's everyone. Congratulations, everyone. Look after your accounts. The marketing guys will be in touch shortly about opening the account. Obviously, they'll be sending an email. So if we take that down. So I say congratulations, everyone. And as ever, where's my chart gone? Got my screen's gone. What's happened? Where's my screen's gone? I've lost my screens. I'm still here. I am still here. Right. Sorry, it's my screensaver. I'll leave you in peace, my friends. Good luck. And I'll see you again tomorrow. I don't know, Big Rock, did you? Pawan said his name wasn't there, or their name wasn't there. Please get in touch if you actually filled in the criteria correctly, Pawan. But congratulations to all the other winners. I will see you tomorrow. Tomorrow is what are we doing tomorrow? It's first of the month, so we'll see how the actual month has finished. And in the meantime, all the very best, everyone. And I say see you tomorrow. Take care. Bye bye.